Alrighty, here's a strategy you can use when you are at the New York Open, and like on Friday, November 7th, at the time of the New York Open, I think it was pretty clear to anybody looking that we were in a pretty solid downtrend, right? I mean, take a look. New York Open was right here. And before that New York Open, I think you could see that we were in a pretty solid downtrend. Okay. So, if that's the case, then you're going to have your 1, 5, and 15-minute money lines, basically for the most part pointing down. And that's what these are right here. This blue and gold, that's the 1 minute EMA. This is, by the way, this is a 1 second chart. I can switch up to, let's put it on a 5, be a little bit easier to see what's going on here. Let me back up here, hang on for a second. Back up to the open, New York Open. Again, this is a strategy you're going to use when you're already in a downtrend at the New York Open. You've been downtrending for the last couple hours from the Globex, and so as you can see, here's the Globex, here's the last, say, hour and a half of Globex. You can see we're definitely in a downtrend, right? It's pretty easy to see that. Hopefully it is. Okay. So, the strategy is pretty simple. I have settings for all these lines and clouds, and I can tell you what they are. Just ask me. But for the most part, it's pretty simple. This is a 1 minute 20. This is a 5 minute 7 through 9. It's a 15 minute 7 through 9. Okay. So here's the way the strategy works. You don't see price bars on here yet. I don't have candles on here yet. Why? Because I want to see something else, and I want to really focus on that something else before I even think about putting candles on. And that something else is the relationship of this blue line here and this gold line. Okay, this is a 1 minute 13, and this is a 1 minute 20. Okay. So when I know I'm already in a downtrend, I want to see the faster blue line come up and kiss and reject off the gold line, the slower gold line. And that's pretty easy to see when that happens, when you don't have price candles in the way blocking your vision. So here, right here at 9:30, we came up, we kissed the line, and we rejected. And the minute you roll over, that's when you can turn on your price candles, and that's when you can look for another back test of these lines. And when you get it, and it back tests off that, that's when you go short. In this situation, this happened 3 times in the first 37 minutes of the market. Each time, the trade went at least 100 points. I think the first time it went 150 points, this one. And then the next 2 times it happened, the trade went exactly 100 points. So right there is 350 points for you using this methodology. Okay, it's pretty simple too. I'll just show you real quick what happened here. All right, so obviously it's 9:30. It's the open. You have your clouds and your lines all stacked one above the other, and you get that kiss right there. That kiss of the blue to the gold. Blue kisses gold, rejects and heads down. When you see that, all you need to do is turn on the visibility of the candles, and you wait for a back test of the very same zone of these 2 lines. You get it right here at 9:33, and once it back tests and rejects off that, as you can see with these long wicks, you can get short. You can get short right down here if you want. Keep a 25-point stop, probably be good. Maybe, actually even a little bit. At the open, you can probably keep a 50-point stop and just go with like 5 micros, something like that. That'd be $500, or a couple, 2-3 micros. If you want to keep your risk down to $200 or $300 for the trade and keep a 50-point stop. But either way, you're going to target this particular trade Did go 150 points. It it went all the way down here, and then once you get your, I took it and got out here at the first bounce, and I made about $800 off that one. So I was just trading 5 micros on that one. And then, but once you have your profit booked, your profit, turn off the candles again and wait for the next setup. Okay, this way you don't get all caught up in what the candles are doing, because the setup comes from the blue and gold lines. That's where it comes from, not the candles. Not until it does what it's supposed to do. And it just makes it so much easier to see it too when you're doing it this way. So you just wait for the next one, right? Meanwhile, everyone's chasing price all around here as it's bouncing up, and you're thinking, I'm going to go long, I'm going to do all this stuff up here. No, it's just doing what it's doing, and just wait for the next cycle, okay? It's just cycles, so just wait for the next cycle. You see it here, happen here. Blue line comes up. It actually does exceed and goes over the gold line a little bit, but look what's blocking it. You've got the big 25K number here acting as resistance to EMAs, not price. Okay, I'll give you a little hint. Price is way up here, but I don't care about that. I don't even want to know what price is doing. Not until we have a blue line kiss the gold and reject and start moving down again. And it's very easy to see when that happens, because these lines, unlike candles, are the price action, they're moving averages, so the price action is greatly smoothed out and very, very clear what's going on, right? It's very clear that this is rounded the turn at the 25K exactly, and now it's headed down again. And as soon as these lines start to separate, I mean, the instant that they start to separate, you know that now you can now turn on your candles and look for a back test of these two lines. It might be this one, it might be this one. I don't care. It might be right in the middle. But you can tell when those lines get back tested, okay? So let's take a look and see what happens after this rolls over. We're going to turn the candles back on. Well, what do you know? There it is, right? Right there. Boom. Comes right up to it. It's way down here. Right up to it. Okay? Like basically, yeah, one tick away. Close enough for me. Okay, these are 5-second candles. If you want to wait to see a red one, that's fine with me. Wait to see a red candle or two. Get in wherever you want to get in. Okay? Then just know this thing's gonna rip to the downside. And it did. Rip to the downside. It ripped 100 points. If you look at this little chart that I made here, this line is a 100-point line. Sorry. This line is a 100-point line, okay? So, take 75 of it. And that's what I'm going to do in the future. I'll just take 75 and be done with it. I'm risking 25 points, okay? And I'll take 75. That's a 3-to-1, okay? Nice, right? All right. Now that you got your money, booked your profit, make the candles go away again. I don't want to be distracted by the candles. I just don't care about them. All I care about is this blue line crossing under the gold line. Now this time it crosses above it, right? But we've got this signal line here, this 5-minute acting as resistance. We also have the 25K. Same 25K we had over here acting as resistance, right? Same one is acting as resistance here. So all we need to do is wait for that blue line to get back under the gold line, okay? Where does that happen? Well, I think if you're paying attention and you're not distracted by all the candles in your face, right? Watching every jump and down, up and down candles, it's easy to see that the blue line came down here, but it didn't cross under the gold. Then it made another cycle up, double top. Then it crossed over the gold, right? That's when it crossed over. So where did that happen? That happened right here at 10:30 and 55 seconds, okay? 10:30 and 55 seconds. So now we know it's time to what? Turn the candles back on and watch for a back test of this zone. Okay, this is a zone. Okay, this is an area that it's a price zone, right? But I'm not really caring what candle, what of these two lines gets hit. Either one's okay, or in the middle or the top. I don't really care. I just want to see it hit and get rejected. Okay, so now at 10:30, it's very clear. 10:31, it's very clear that we have another fast cross, blue under gold. All right, so I'm just going to go ahead and turn my candles back on, and keep my eyes open. Okay, what's happening here? We don't get anything yet, do we? We haven't gotten anything here. Price it's going down, and you might feel like, hey, I'm missing the boat. I don't care. That's somebody else's plan. You can sell the 77 a couple of times here, whatever you want to do. I don't really care. I'm waiting for price to come back up and touch either the blue or the gold or both lines, and there it is right there. See that? It hit it, it rejected, it turned red. Right here, 24,950 could be an entry, and your target would be 75 points under your entry, right? You're not trying to catch the top 12, you're not trying to catch the bottom 12. You know it's going to probably go 100, so just put your target 75 under 50, which is what? That would be the 26. Call it 23. It would be 70. It would be the 77. Make it be 23,877 for the target. Okay. There it is. Even went another 25 points under that. But you see how I'm showing you this methodology that is an amazing. Actually kept going. But the thing is that why be greedy? Because you know it's oftentimes going to bounce off 77. Just take your 3 to 1, your 75 points, and be done with it. That, or do whatever else you want to do, But I'm just telling you that when you take price off, okay, the chart, and you don't concern yourself with it until you have a signal based on these EMAs, which I've laid out for you. I can give you the settings, no problem. But these trades are just, very high probability, very high percentage. Here, let's look at them one more time. Here's the up, and don't do this after 10:45. By the way, it's done. Don't do this after 10:45. Okay, here's the opening trade right here. Okay, you keep a wider stop because it is the open. I'd recommend keeping a 50-point stop and cut your risk and cut your contract sizing in half. If you normally keep a 25-point stop on the NQ, keep it 50 and just cut your contract size in half. Or cut it to 40%. So there's that one, and you turn it on. You can see where it hits here. It kisses and separates here, taps in right there. Boom, and you're off to the races. This particular one went a lot of points, like 150. Okay, then go ahead, make it go away, make price go away. Watch your blue and your gold lines again. Blue line bottoms out, starts heading up, heads up to the gold line, gives it a kiss, and takes off. Says, "I'll see you later, honey. I'm going to work." Headed down. Now you've got your separation. Now you can turn your candles back on. Where's the first touch? Right there. Short it. Write it down for 75 points, whatever you want to get. Take a nice trip down. Book your profits. Hide the lines again. Okay? Wait for the next cycle. It cycles down. It cycles up. It crosses the gold this time. But that's okay. We're not going long, by the way. That's not a long signal. You're not doing the opposite for the longs. Why? Because you're still in a downtrend, guys. See this anchor line? This is the anchor cloud, okay? This is the anchor cloud right here. I'm going to write that down for you. You do not buy into a dropping anchor cloud. All right? Just don't do it. Okay. Anyway, let's give you the last example one more time here. This is good because it actually not just kissed it, but it went over it, and it stayed over it for some time. So from 10:14 to about 10:30, about 15, 16 minutes. Okay, so just wait patiently until you get that fast cross again. Blue under gold, and separating. Okay, once you get that, make price come back. Keep your eyes on the lines and on the price. And like I said, you can touch either one or both. In this case, it touched the faster I call it the MACD line. Touch that, rejected. There's your first red candle on Heiken Aishi. Go ahead and get short. Put your 75-point target down. If you're getting short at 50, then your target would be down at 75, down below, or 77, since that's always the support right there. And there's another 75 points for you. So just some quick math. Let's say you're risking $300 per trade. Well, all three trades you made at least $900, right? You made it 3-1 on all three trades easily. So that's $2,700, and all you risked was $300 per trade, right? So anyway, I hope you like this strategy. I worked on it for about 8 hours yesterday. I thought it up and worked on it for about 8 hours yesterday, and basically wrote it all down, made all the adjustments, the settings, calculations, so it would work really well. It also worked on the ES too. Yesterday, same thing. Let me hide the candles again. The first one didn't trigger. But the next two did. This one right here, price just dropped too hard and it never came back and touched in. But on this one it did, and on this one it did. Let me show that to you. On this one, you would start looking right about here, where you had that separation here again, that cycle down. So here's your back test right here. After it separates, just came pretty quickly after, and then you had a very nice push to the downside, right? And your other one was you wait until it cycles down under again. Chopping right here, right? It cycled over here, put in a little bit of a double top there, and then you had the separation. Again, it's better if you're not looking at this when you first look at the separation. And that's what you really want to focus on, is that separation. Okay? Maybe even, in some cases, maybe even make the smaller cloud, I call it the signal cloud, go away. If it's easier to see for you, and you just want to keep the anchor cloud up and not the signal cloud, that's fine. I kind of see the signal cloud as additional confirmation that you're in the right place doing the right thing. But again, if you don't want to see that signal cloud, if you just want to be really crystal, about that separation, then go ahead and wait for that separation and then turn on price, right? Price came back up right here, right? Tagged it. You can get short here when you start seeing red candles. And look at how smooth the smooth was to the downside from that entry. It just doesn't get any better than that. And it continued down from there. So this is a massive winner. I'd say 701 down to 81. The 20 pointer right there on ES. It's a lot. That's a big winner. 20 points. Anybody's book on the ES. Okay, so I hope you like this little system. Again, if you want to contact me to get the exact measurements and everything, I'm happy to give it to you. I know this information, is valuable information, but only if it's applied. And most people don't really have the self-discipline to apply it. That's why I don't really mind giving it away for free. I might charge for it later, but right now I don't mind giving it away because I'm just trying to help people right now, and maybe later on I can charge for it or whatever. But this is really good information, guys. I've worked on these numbers for a long time, this concept for a long time, trying to come up with what makes really good sense for trading these NQ and markets, and obviously it works on the ES as well. So anyway, I hope you like this. This is just my present to you for encouraging me to help you. This is it's because I'm helping you that I'm doing so well right now. I know that might sound totally weird, and I've told you this many times, but it's because I started to teach that the idea development became so high-powered, basically. I mean, I'm coming up with ideas all the time now, and this is just one more, which I think is a really good one. But this is creating some trades that are just massively profitable trades. I just can't wait to continue to use this in the markets. Okay, all right, that's it.